All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And what better way to start off the second trading day of the year by letting you know that the stock market is going to move big tomorrow. So you got the Fed minutes, and that is going to be a huge event. And I have a breakdown and really an explanation on one of the most important themes of the year. We're going to go over it, but quite simply, my friend, if you are not familiar with this dot plot, we have to get you familiar with it. We're going to go over a lot of the expectations on the Fed, and then we're going to go over all of the other data, because beyond the minutes, you're going to get ISM jobs, manufacturing, mortgage applications, and a bunch of other things. And why that's important, because if you did not see today, it was pretty wild. I mean, they got us all hyped up for the beginning of the year. They took us back to those previous highs. Like, let me pull it out here. This was the highest we went after dropping on Powell, if you guys remember any of that. But we were up pretty high in the morning. I believe the NASDAQ was about 1.5%. It lasted for a little bit, and sure enough, 9:45 and 10 a.m., both data sets, that is where everything started to change. So we have a lot to go over. The first day of the year was already crazy, but now what we're getting tomorrow, it's going to be a big one. And then you burn a day or two, then you get the non-farms, and then we're heading into the CPI and earnings. So I got all of that for you. I even got a bunch of plays. I think you're going to like the plays today, because I got a bunch of conferences you may not have known about that will actually be some catalysts during the day tomorrow. So I'm going to go over all that, and then we're going to go over the plays we made to start the beginning of the year. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We are live in the morning, and we'll see you there. And then especially non-farm payrolls, we are going to be live early this week to get it all for you. But I hope you're ready, and Happy New Year, baby. Run it.
Walking to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, like I'm saying, that data dump, it is going to be happening tomorrow at 10 a.m. Eastern. That is about 30 minutes after the bell, and you are going to start getting a lot of economic data. So we'll jump to the calendar. You can see here it's going to be mortgage applications, ISM employment, ISM manufacturing, and we had manufacturing PMIs today, and that's where you saw the bigger reaction. So this one could be very important, but the things I want you to be looking at will be ISM prices paid and mainly just the ISM employment. Now, the ISM is going to be just like a data gauge, so it's going to be harder to read, but prices paid, that'll give you a little bit of insight more or less. But this is how we're going to play it tomorrow. Those two things, anything related to jobs and unemployment or employment, those will be the bigger factors. And then the final move is going to be happening at 2 p.m. Eastern with the minutes. So I have a little bit of a breakdown as far as the minutes, but if you truly want to understand it a little bit better, there's a little bit of background. So that's why I'm going to jump here to the second key, and really until the earnings start hitting, the main theme that we need to be following right now, this is kind of the vibe I've already gotten after the first day. We brought this up yesterday, but now kind of just looking at how the bond market got off to an early read this morning, and with even gold going up and all of that, it is starting to look like the main theme will be, at least for the short term, how much is the Fed going to move rates versus what the bond market is expecting. So why this is important, it relates to those charts I showed you. I'll jump to them in a second, but it's very simple right now. Pretty much 75 basis points is expected for the rest of the year. Essentially, if you go and look at what Powell is saying, Powell is a little bit higher. That was the summary of economic projections that we got on December 13th. They said the Fed terminal rate is about 5.12, which is pretty much 5 to 5.25. However, the market currently, as of this year, to start off this year, the bond market, the Fed futures, they are only expecting 75 more basis points for the entire year. And this is what I want want you to understand right now, because essentially that is saying that there is going to be either 150% rate hike or 50 basis point hike and then a 25, or there's going to be 3/4 basis point hikes probably over the next couple of months. And now why this is important and why the minutes are going to be important, because we're going to look for some of those clues tomorrow. But as we move forward throughout earnings and everything else, any change to this little box that we're in of either 150 1/4 or 3/4, and then the Fed futures, and then what the Fed is pricing in, this could all upset the market if it changes. So now these are the pictures I was showing you early, and this is the Fed futures, and you could read it very, very simple here. Right now we're at like 4.33, or I think we're a little bit. We're at 4 1/4 to 4.5. That is the current rate. But as you see here, by June 2023, the Fed futures are saying the highest we will go is 4.97. So keep that in mind. That could either be a 50 1/4, and then even factor in a pause. That's kind of what these 3 months are showing right here. But you'll notice after June 23rd, that rate starts to go lower, and that means that the Fed futures are pricing in a rate cut after June. That is saying they only expect the rate to go as high as 4.97, even though the Fed and the dot plot has been saying it'll go to 5 to pretty much 5 1/4. So that's kind of this white line here. And where does the bond market or the Fed futures expect us to be? You can see it right here. It's just above 4.5, but wow, where'd it go? We come back to the other chart. You'll see by January 24, the market is saying 4.5. So what does that mean? Is that a couple of more raises until middle of the year, and bond market is saying that the Fed will be cutting back down to 4.5, just a little bit higher than where we are now by the end of the year. However, Powell and the Fed says, nah, we're going to end the year at 5.2 or 5.0 to 5.2 and then cut next year. So if you've been paying attention, man, even from the end of last year, this is that game of chicken that we have been talking about. And essentially, if there's going to be any repricing or it's not priced in, it will be big adjustments to any of this. And that's why now, coming into tomorrow in the minutes, those minutes are going to be very important, and we want to see, one, what is their justification towards raising that terminal, and if there's any clues to give us guidance or anything that will be compelling enough to move the market either towards the Fed or away from the Fed, and that will have its own reaction. But I really hope you guys realize this now, because like I'm telling you, there's kind of a easy way to telegraph the Fed right now, because it's either 150 or 3/4. So as we get into the end of January, that will say a lot. So the easy thing to look for tomorrow is anything related to the timing of those hikes and what could happen at the next meeting. If anything in the Fed minutes is saying, well, it's leaning towards a smaller hike or 50 basis points by the January meeting, the market will respond instantly tomorrow. So this is what I'm going to be looking out for. There is a good chance that the minutes could be a dud. We've said that before, and then it's ended up coming in and just came out swinging and been a big event. So we're going to see, but hopefully this little background and understanding this main theme here, this should highlight it. And then just don't forget, before any of that, the jobs and the data, it's going to move us big. And like you saw today, you already got some big movements off of the data, and it looks like all that volume is back. So I hope you're ready, but let us get into the plays. So, right off the bat, ladies and gentlemen, I got a lot of plays. I labeled them as 3 different plays, but as you'll see, there is more than one. But like I was telling you, both of these are 2 different sectors. They will be related to these conferences. And if you remember a little bit towards Thanksgiving, I was calling out some of these, and then during the middle of the day, you would get news randomly about this happening or that happening, and then the stock would move. Well, these are usually those types of events. So no guarantee anything could happen, and none of this is a recommendation. Options trading, stock trading is extremely risky, even futures. Make sure to consult with a financial advisor. For no purpose only. Thank you for a wonderful day. But let's start with AT&T and NVDA. Both of these, there is a communications conference for Citigroup tomorrow, and AT&T is going to be there, Verizon and T-Mobile. So I will have the direct times they come on tomorrow. If you come on stream, I believe Verizon is going to start it off at like 10 a.m. Eastern, but chances are we'll probably hear news related to this. Sometimes it's good, sometimes it's bad, so we'll see what happens from there. And then why do I have NVIDIA on there? Because the communications conference is tomorrow for those companies, but then on Thursday, JP Morgan, they're going to be having a CES tech and auto forum, and then literally NVIDIA, Micron, Intel, and a couple of others, like I think even Marvel Technology and a few other chip makers, they will be there as well too. So if you want to get a little bit ahead or see how tomorrow plays out and then factor that in, I think this is a great place to look, and I'm going to be keeping my eye out for this one as well too. But those are your first set of plays. Then coming in at number 2, baby, we got another conference, but this time it is oil, and watch PSX. Not all of the big oil companies will be there, but there's going to be a conference on Thursday, the day after tomorrow, with Goldman Sachs and oil already, man. If you saw today, it has been absolutely wild. They were the first one to get knocked out, but they're going to be speaking at this. I think a couple of others, it's like kind of like Clean Energy. I believe that's the name of the conference. But again, I will give you updates on stream or even tomorrow. Let me know if you want more updates. But at the very least, oil is moved very big today. It moved 3.6 as an industry, and I believe even crude oil fell to a similar degree. But it's quite simple. Oil is the first one to get knocked off as far as this strategy we've been talking about, where a lot of big money, they take losses at the end of the year, and then they sell gains at the beginning of the year. And think about what oil did last year. It absolutely killed it, and it kind of makes sense that they are the first day, they are one of the biggest losers. So we'll see how this plays out. There's also some catalysts, but I'm going to be watching PSX. I think that could be a very good one. That is play number 2. And then finally, play number 3, baby, Apple. They had a lot of big news today, and the news was about one of their suppliers saying that they were told by Apple to slow products for most of their product lines, like the iWatch, headphones, and all of that. And just one thing I want you to keep in mind here is that Apple has had a lot of bad news in the last month or so, from the factories in China, slowing demand, analysts saying this and that, but especially those factories in China, and now this update. So really, you got to watch out for either the death blow to Apple or watch for everything to blow over as we get into earnings, and then people start trying to buy the dip, and especially depending on how the minutes and data plays out, as we'll kind of even get a broader sentiment with the market. But those are the main plays. As far as everything else, let's jump to the plays here. Actually, well, before we get into that, I'll show you what I did today. I made trades, man. I know the market was moving very, very actively. Can we zoom in on this? You like barely could see it here, so hold on. It's going to just cut when I'm done with it. I need to get it like smaller, or maybe if I keep ranting. Do you guys like the live watch list? You got to let me know. This one ain't live, but hopefully you didn't miss us too much. I missed you guys, and hopefully we see you on stream tomorrow. That's a future. You see, is it on the screen now? So I got to adjust that a little bit, just so I don't know if you have good eyes like me or not. But anyways, here are the only 2 plays I did today. I'm still holding everything else, and we'll go over that. We even gave you guys the update yesterday, but I went with 2 micro of the futures on the ES. The MES is very, very small. I only realized about like 200, 220 on the day. Kept it small because things were moving big. I liked it, and I said, let's get back into the swing of things. Market's moving a lot. There was opportunity, but I have all these plays, and really, I'm waiting for the data to either average down or wiggle in and out of anything else. So I started this morning 3846 to 3855. It was like $90 or so on 2 of the micros, and then I did 3832 to 3845. Just flipped those out 2 different times throughout the day, kind of all day if you really look at the clock there. But nice flip. Started 2 for 2 to get off the year. Let's get off to a good start. But besides that, just riding out everything else. And now you don't need, I think you can see this here. You can see everything here. But as far as what I'm holding, still in that ES, and we'll see what the minutes do. I do think there will be a big reaction following the jobs report tomorrow, but at the end of the day, depending on what is in those minutes, and if it's easy and gives a clue to when the Fed is going to be going with something bigger or not, or specifically what they will be doing next meeting, that will be the most important. So going to be watching out for that. That old MNQ kind of came back a little today. I think at one point I was only down like 200, but I was still holding this one from the China stuff. The bonds came back big, and this one was weird today because essentially stocks sold off, bonds stayed green, gold went up, and the dollar went up. And then, like we're saying with the Fed futures, it seems like this whole narrative of buy the bonds, it came back out of nowhere today. Everybody was talking about the bond market, so we're going to see what happens, but still riding those out. I've yet to average down. Maybe I will. Maybe we'll see what the data presents, but watch out for that. Then the Boeing Lockheed trade absolutely washed me, but still holding those. Then JD, this one came back a little bit more, but why I have it up here is watch out for the China name. So they came up today. It was like one of their biggest moves now, again, even since like December, even bigger than what we saw a couple of weeks ago on the first reopening news, but keep your eyes out for them. Even like Wynn and the casino stocks did good. And then still short on Microsoft. I like this. I kept it small. I want to add more to it. But again, back to that strategy of sell the winners at the beginning of the year. I'm still kind of expecting that. That's why even Boeing and Microsoft made the list. But then LMT, they could also get affected by that one as well too. But there was that. And then finally, Tesla, I doubled up my loss by simply holding in one day because they wanted to drop the most since September 2020. So, yeah, there you go. But still holding that. A couple of other plays, even my old Qualcomm, that's coming back there. So, still going to be riding that one to see how it plays out, especially with some of that tech stuff. But other than that, I'm probably going to be trading the futures, either the micros or the bigger ones, depending on if the data is an easy read tomorrow. And then after the minutes, I think that'll give us enough wiggle room to set us up in a CPI or say, well, maybe it wasn't clear enough, pull back until we get the CPI, but by the end of the week and setting up into earnings, I'm sure it's going to be exciting. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember your character is determined by how you respond to things, not you changing your behavior based on what happens to you, baby. You got to stick to the plan, stay focused, and don't ever forget 10% of all of what you earn is yours to keep, and you need to pay yourself first. But Chattadonia, we got a lot of events. You got to keep the budget ready for all of it. That mentality will also take you a lot of ways. It may have already brought you this far, baby. So let's bring it home. We've already brought it home. Actually, we got to take it back to the other home now. You know, it's the beginning of the year, but Chad, it's game time. Stay hydrated, stay healthy. I'll see you in the morning. Come up with a smile and some energy, and I hope you're ready for some big moves, baby. But I love you. I will see you in the morning. And God bless you. I love y'all. Hey, man, you ready? You ready? I feel like I'm kind of awkward, but I think it's just me hyped. I don't even think it's awkward anymore. I think it's just hype, and it's game time, baby. Are you ready? Let's go and go little by little, slowly but surely, okay? Keep the character of a king, bro. You a king, bro. That's it. Don't let him play you. You feel me? Oh, hey. Okay, I love you. Bye. Hard.